welcome back. I had a watch list this morning with over 500 stocks, but I've managed to whittle that down to 40 that show some sort of potential or worth talking about. So let's get started with the S&P 500. This level that we highlighted last week, we rejected quite hard off of. I was expecting to see a retrace to in between the 0.5 and 0.618 fib. Didn't quite get there. Got the bounce off the 0.5, so was unable to fill any orders on that position. Looking for continued upside. We'll see how price reacts when it gets back to this level. If it breaks above, holds, then obviously bullish, and then we'll be looking for this downsloping supply line to be the next target. However, if we come back down into this area, then we're looking to see how it reacts again. Same thing, whether get the bounce off there or we'll come through. So we need to see how it reacts at certain levels, and then we can react accordingly. Next up, Nasdaq, slightly stronger bullish technicals on this one. We obviously had the break of the descending channel. Price didn't quite reach the 0.5 fib level, and then we've retraced down, bounced off the 0.618 with the bullish hammer. So if this level holds and we get continued upside, that's a change in market structure. You've got a higher low for the first time in a while, and then we'd then be looking for price to come and break above this high, and then you'd have a higher high, higher low situation, signaling change in market structure, and you can start looking at getting into more long positions. The precious metals had a massive week, certainly a massive day on Friday. 3% move from gold and a 7.2% move from silver. Gold's now trading within this range. We've got the triple bottom, and what was once support is now resistance twice. We've got quadruple bullish divergence on the MACD as well, and a downsloping supply line, which price looks to be breaking above. So all looks very bullish for gold, certainly. In the short term, could be a local bottom. Silver as well. Sorry, I'll just delete this doodle. We've got the parabolic support coming down. Have this level highlighted from when it was resistance back here, and it's kind of active resistance here, consolidating. Massive day, 7%. Look at the size of the candle. We're now challenging this level. Want to see it broken and then retested before thinking about any kind of silver positions. But this also looks like a local bottom, similar to gold. Next commodity, we've got oil. Oil as well looks to me like the change in market structure. We had the higher high, higher low, and prices now coming back to test the previous high. A break above that, and I think oil will be challenging some of those higher levels, maybe even going back to previous all-time high in the future. To go along with the oil theme, we've got Chesapeake Energy Corporation. Zooming out onto the weekly, at first you can see that we've got confirmed bearish divergence, but it looks to have played out because your high was here, you've come down and you've hit off this support line, and the MACD looks to be waning, although you did have this massive rejection wick last week. Going down into the daily, the ascending triangle pattern is a lot more prominent, and whilst we're still holding this supply line, I'm going to be looking for a break above the neckline and continuation to the upside. Certainly when we turn the moving averages on, we've got the 200-day moving average and the 100-day exponential moving average. Price is still above them both, and the 100-day is still above the 200-day. So this just looks like it's still on the bullish trend, and I don't see any reason why it can't break this level and continue higher. Turn the moving averages back off. Moving on, ADM. This looks to me like an inverse head and shoulders. However, you do have developing bearish divergence on the daily. So wait and see if price breaks above this neckline. So it looks to have rejected quite hard on Friday. So we'll wait and see what happens this week coming. Next up, AEE. We have this support line, support here, and it's now looking to flip it as resistance. From that high to the low, we've retraced to the 0.382 Fibonacci level, rejected above 3 times, and we've also got developing hidden bearish divergence on the daily time frame. So how I'd be playing this is I'd be taking a short position, tight stop above that most recent wick, and then first target would be the low, which give you a 2.2 RR trade, and then zooming right back out, we can see the next sort of level of supports down here, and that would give you your 3 RR trade. Nice and simple. Moving on, ARMK. So we've got a rising wedge, broken down, and we're looking to get almost like a retest from this demand line. You've got your developing hidden bearish divergence again on the daily. We do have earnings on Tuesday, so that's one to look out for. Moving on, KOTY. This looks to me like a sort of bear flag. You had the big run down. Price has now found itself moving within this range. Depending on the next couple of days, you could potentially have hidden bearish divergence again on daily, but strong day Thursday, strong day Friday. We've got earnings on Tuesday as well, so we need to watch how this breaks. If it breaks to the upside, it retests, then you'll potentially see continuation. Breaks to the downside, I'd probably be entering for a trade. Next, Tesla. Tesla, similar pattern. It's more of a defined bear flag, and you have got, again, the same developing bearish divergence. The MACD is curving more to the downside, so I would be looking to enter this. And you know, if we zoom out, then if we break this level, there's really nothing below here until this next level here. And if we take the fixed range volume profile, we take it from the low to the high, you know, your next volume shelf is on this level. So if we break this, it could be quite a long way down. That's it's a 30% move on Tesla. So if we were to see that, then the indices would certainly be taking a massive hit there. Moving on, HBI. So if we go back down it in the daily, we've got price has, hold on, I'll just get my scales back right. There we go, that's better. Yeah, so first of all, we've got developing triple bullish divergence on the MACD. Price has been below this supply line since August last year. Sorry, August this year. And we could be having a sort of dragon pattern here. And we'll get if we were to get the break, then we'd be looking for either a retest or a higher low, and then continuation to the upside. If we turn on the, no, moving on. AMRN, we've got price within a wedge. We've got the triple bullish divergence, which has played out, but price is now coming down and is retesting the breakout level. We've got this massive gap above at $2.64. Last earnings were positive, so there's potential for some good upside here. You could take a really kind of long trade targeting that gap. Obviously it'd be a longer duration trade, but it's a 7-to-1 RR trade. You only risk 1% of your portfolio, you make back 7 in one trade if you're to hold that long enough and it's to reach that target. So there's definitely potential in this play here. Next up, ARKK, or the ARK Innovation ETF. So we had the falling wedge charted with the price coming down to previous support. We got the break from the wedge, however we never got the follow through with the triple divergence as well. We actually got bearish divergence developed and looks to be playing out. Worth noting, however, is price has been holding that support level quite well. So until we sweep this low and confirm below it, I'm neither here nor there on ARK. Oh, neither here nor there. In fact, there could be potential to re-enter for a long. I still think that this is a range that we're now seeing. It could almost be like a wick off accumulation range. So this is one to look out for in the next kind of week or two. Moving on. So these next two plays are easy for me to say. Brazilian stocks. NU Holdings. Quickly to go over. Broke through previous support, consolidated below. We've challenged the previous support, now resistance, rejected off. We've rejected twice, and now we're moving back up towards. Apart from that, technically there's not really much. However, I think when we turn the moving averages on, it's a little bit of a different story. Price is now back above the 100-day exponential moving average. I think we could be seeing a local bottoming pattern, and what I'd be looking out for is, again, a break above this level and a retest, turn it into support again, and then this is where you'd be entering with maybe your stop loss down here, and you're targeting these higher levels up here and up here. So I think there's good potential in NU in the future. STNE is another one which I have already entered a position in. This is going in my long-term portfolio, and I'll tell you why. This IPO'd back in 2018 at $32, ran all the way up to 95 from 18, so massive run during the pandemic. Warren Buffett and Berkshire Hathaway are invested in this, holding it at a loss, but now what we're getting is the 100-day moving average is now crossing over the 200-day. Price is forming this ascending triangle. It's like an ascending triangle bottom reversal pattern. And we also had a daily falling wedge, which we got the break from. This was highlighted in last week's video. We had the falling wedge, which we got the break from, the retest, and you've got this well-defined level of resistance. So yeah, I'm looking for entry in this whole level here. For me, ideally, price comes down and just bounces in here for a good couple of weeks, allowing me to fill up my position more, and then I think we're going to get the break and we're going to see the reversal in the trend here. We might test this level and come back down, but certainly there's opportunity short term and there's opportunity long term in this play. TPX, this is another one that looks similar to STNE. It's not down as much, but you do have this really well defined gap right here. So, if you're to take long position on a break or a retest of this level, you're talking, you've got a decent trade there, like a 2RR trade, or potentially, I don't know much about the stock fundamentally, but there could be potential long term there as well. Next up, Crocs. So this is a funny one. We'll zoom it onto the weekly, get a better view. So price has come down, broken the 200 moving average, but it's now back above it. It's now back above the 100-day exponential moving average. So it looks to be, holding this bullish trend. It's just we had a massive retracement from the COVID low to the high. We bounced off the 0.786, to the cent just about. So these Fibonacci levels, it's crazy how well they're respected sometimes. On the daily, we can actually highlight there's a bit of a almost inverse head and shoulders. You've got your shoulder here, you get your shoulder here, and you get your head. This is your neckline. Price is broken above the neckline. You've got the 100-day moving average crossing above the 200-day. So, yeah, this one looks strong for a move up to this next highlighted zone. It was kind of support here, broke through. So this is where I'll be targeting next. Next up, we've got ASHR. So this is just a quick little mention. Obviously, Chinese stocks, if anyone's been paying attention, have been getting absolutely hammered in the past kind of year or two. So I've just got this China A shares ETF here. Got prices making a kind of falling wedge pattern right down onto this previous support level. massive day on Friday, up nearly 7%, and you've got developing triple weekly bullish divergence. So this could be the potential local bottom for a move up. I've actually been buying some shares in Chinese companies with strong fundamentals, because I do think that we will see a lot of money flooding back into that market when they reopen, and there's a lot of opportunities there, which leads me on to the next three. So the first is Neo. This was a big player during the pandemic. An absolutely colossal run up from $3 all the way to near enough 70. 4,000%. People were making 40x gains on this stock, which is just insane. But from the top, in January 21, we've just seen sustained selling. Buyers haven't really stepped in at all, apart from a few rallies. But now what we're seeing is we're getting this development where we've got this downsloping supply line, which has been resistance multiple times, and now you've got this support level, this demand line, which has been support 3 times clearly. And last week, a massive week, we finished on Friday up 17%, which is just huge. Neo has earnings this Thursday coming. It surprised the downside on its earnings last time, so for me, I think this is a great time to be picking up some shares for a longer term position. I think stock has great potential, but going forward, we want to be seeing a break of this downsloping supply line, and that to me, with the crossover of the moving averages, would signal a kind of change in the trend. Lufax Holdings. The technicals aren't amazing on this, just seems to be forming like a massive falling wedge since it IPO'd. However, you are getting developing bullish divergence on the weekly, and on the daily you have confirmed bullish divergence. For me, I like this stock, great earnings, a really low PE ratio, and it pays like a 12% dividend, so for a long term portfolio, this is a great time to be picking up some of this stock, in my opinion. QFin, this is another one, so it's travelling, prices moving within this sort of defined range where it's support here, resistance, support, resistance, and respecting the midline quite well. This is a fundamentally strong stock as well, so one I'll be looking to pick up shares in the future. Right, so that's the 40 stocks. Hopefully some value to be taken out of them. Anyone watching, I hope you really enjoyed. Please subscribe, leave a like. Cheers.